Right now, most investors are completely ignoring one of the most consistent patterns since 1962 in the stock market, and it actually all revolves around midterm elections. Historically, these periods have triggered some of the biggest market moves, and almost nobody is talking about it. So in this video, I'm going to be breaking down exactly how stocks perform before midterms and after, and exactly how you can position yourself to make a lot of money. Let's get into it. All right, to get started, please give a like and subscribe. I really appreciate everyone who's watching. Now, I will say I found something very shocking about the stock market performance during midterms, and it was 100% guarantee for over 60 years. 100% guarantee. It was crazy. So I'm going to kind of go over exactly what I found out and what we can expect from stocks up to midterms and after midterms, the election. So historically, the stock market, S&P 500, tends to follow a specific V-shaped pattern during midterm election years. A sluggish performance and high volatility leading up to the vote, followed by a powerful, consistent rally once the results are in. So for the first 10 months of a midterm year are typically the weakest of the entire 4-year presidential cycle due to political uncertainty. So technically, we're on average right now, we're at the worst time in a 4-year period. Right now we are in the worst time. It's April 2026. We get muted returns from 1962 to 2022. The S&P 500 averaged just basically nothing. It has been 0% in the 12 months leading up to the midterms, right? So if you go 1 year back, it's exactly where it was a year ago once the midterm elections happened, compared to a long-term historical average of around 8%. Significant drawdowns. Midterm years often see sharp declines, with the S&P 500 dropping an average of 18%. Remember, it's only dropped 9% so far this year at some point before November. So usually the S&P 500 drops 18%, and like I said, we're at 9%, right? So, excuse me, higher volatility. Markets are notably noisier before midterms. Since 1970, midterm years have shown a median volatility of 16%, compared to 13% in all the other years. So if we go, here's the midterm, this is when the elections happen. If we go back 1 year, that would be 2.4%, about 2.5% from where we are now. It is April 6th, and so that would put the S&P 500 in between, almost 6,800. Right now we're at 6,600. And like I said earlier, we have only had a 9% biggest drawdown, right? We're above that too. So if we want to get to 18, anywhere close to 18, let's say we get to 12, we still have to go a long ways from here still. But here's where we make the money. Let's talk about making money. Once election results are finalized, the removal of policy uncertainty historically triggers a strong market rebound. Remarkable consistency. In every midterm election since 1962, the S&P 500 has been positive 12 months later, regardless of which party won. Every midterm, it's not or, but, of the, no, it's just, it doesn't matter who has won. After the election, 12 years later, or 12 months later, the S&P 500 is up. And I'm going to go over how much it's up every single time. 6-month return post-election is often the strongest in the 6 month after, averaging 14 to 15% gain. And this is all again from 1962. I take it back to about 1990, and I'll show you really quick. 12-month return, the average return for the full year is about 15 to 16%, nearly double a normal or typical year, right? So this is what these are all the midterm elections, and then this is the amount it performed 1 year after. Now, as you can see, we had a big boom up to here. And then, so here we have 1990, and this is 94, this is 98, this is 02. So this was after the tech bubble, right? You can see here, but when you look at it, plus 25, plus 27, plus 20, it's all double digits except for these 2 years. And they still, I mean, you look at the market the years after that, though, that it continued to perform remarkably. So even though it didn't perform great 1 year after, it performed insane right after that. So where are we going to go from here? Now, we can see where the market has really gone up in compared to these other ones, right? We're up a lot, but it was 14% after the last one. So I think we can definitely do a drawdown all the way, maybe 6,000 or maybe somewhere around there, right? And then jump after the elections. That's a possibility. This is historically what happens in a full presidential cycle, right? The first year, right after the election, you get about 13%. Again, now there's no more questions. Year 2 is the midterm year. That's right now. So you have a really weak year. There's a lot of questions, a lot going on. Right now we got the war, all that. Year 3, pre-election, right? That's, like after the midterms, and this is pre-election, so no one's really focused on anything. 16%. Then year 4, okay, now questions start coming up. Where are we going with, the government and all that? So, once people don't, once there's questions up in the air and there's not clarity, then that always brings it down a bit. Gridlock is good. Markets often perform better when government control is split, right? You have a Democratic House and Republican Congress, or vice versa, as a gridlock makes major disruptive policy changes less likely. But right now we have a Republican president, Republican Senate, Republican House. So right now the Republicans can basically make any change and do, not anything, but they can do a lot more than if the Democrats had one of those, right? Just one of those. It'd be a lot easier to make sure that things don't go crazy. But right now, anything can happen, and people don't like that. Fundamentals over politics. While these patterns are persistent, long-term returns are ultimately driven by economic fundamentals like corporate earnings, inflation, and Federal Reserve policy, rather than just the elections, of course. So what can we expect going up to the midterms and then also after, right? I should have put and 2027. Well, the election is November 3rd, Tuesday, November 3rd, 2026. So that's when that's happening. And we're usually going to know the following morning on Wednesday exactly what happened. Historically, the president's party almost always loses seats during midterms. Since we are in the second year of Trump's term, expectations are currently leaning towards gains for Democrats. Most analysts currently view the House as a toss-up, leaning toward a Democratic flip, as voters often seek a check in the executive branch, right? They want to make sure that it's split. And then the map for the Senate, the map is more competitive, but Republicans are defending several seats in purple states, which is like the mix of blue and red, making it a high-stakes battleground for control. So historically, we are in a war, right? So I said, well, what's going on with the wars? Historically, starting a war during a midterm year creates a rally around the flag effect that can temporarily boost a president's approval rating. The most famous was 2002 midterms after 9/11, when we started the war on terror. This is a little bit different though, right? Most often the sitting party loses seats, especially if the war is seen as a quagmire or causes economic strain. And this is not a giggity, no. It's just not seen as like, what's the point? Why are we doing this? Or it's going to cause economic strain. Well, in the current context of the conflict with Iran, several factors are influencing the sitting party's performance. Economic blowback. The war-related spikes in gas and grocery prices are historically more damaging to a sitting party than the military action itself is helpful. So right now, with all the prices going up, gas, grocery, all of it, it is not helping the Republicans at all right now. While war can energize a president's base, it also risks depressing turnout among America First and isolationist voters who are wary of forever wars. People are like, why are we even in this war? Nothing happened to make us jump into this. So right now, currently, we have a Republican-controlled Senate and a Republican-majority House, like I said. So there's 53. This is the Senate. We have 53 Republicans, 47 Democrats. And in the House, we got 218 to 220 Republicans, and Democrats 212 to 215. So let's say we end up right here and it's 0%, right? 0%. The election happens. We look back 1 year, the stock market's at 0%. And then we go up 15% from there, right? So 15% from the midterm election, assuming that is a 0%, right? The year before. You're looking at the S&P 500 at about 7,800 by November 2027. 15%, right? We saw back in that other chart, we had multiple 20s, and then we also had a 5 and a 7. So I think it does depend on how this war goes. If the war drags on longer and into the midterms and post-midterms, that could drag on the post-midterm performance. But if we do have a resolution, then that would be great. But anything can happen. Anything can happen, right? I mean, check this out. This is the Easter, right? And the day after, Trump says the entire country of Iran could be taken out if no deal is reached by tomorrow. Trump warns a critical period in Iran war, threatening severe strikes if there's no deal by Tuesday. Now, if you're watching this, it's probably already past Tuesday. This has already happened. So anything can happen, right? So thank you for watching. I really appreciate everyone who does watch. Please give a like and subscribe. Like I said, anything can happen in this market. You know, we have Trump and Iran going at it. Trump does not want to back down. Iran is not just going to back down. Iran's not just going to back down. I do not see them as a country that's just going to give in to Trump, especially because of the disrespect he's thrown their way. You know, so where the stock market ends up going from here until the midterms, I can't really say. But given the fact that the 10 months leading up to midterms are the weakest months for a whole 4-year period of a presidential, of a president sitting, like that just makes me a little weary of I don't feel confident in this market right now. I don't feel confident. I know we're on this little rally for the last week. We're kind of going up. We've bounced off the bottom. Anything can happen. Anything can happen. So if you're aware and prepared, you won't be scared, right? I have to stress that. I can't stress it enough that if you're aware and prepared, you won't be scared. And so you'll be able to buy dips. You'll be able to buy things just as it happens. So yeah, thank you for watching. I really appreciate it. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.